because this tool is really one of the biggest tools that I'm seeing right now in our marketplace to help eager first-time home buyers who are kind of scared of that monthly payment get into homes that are going to end up being very, very fruitful for them down the road, right? So in a previous video, I talked about a temporary rate buy down and how that helped a client get the house that they wanted to buy with the payment that they wanted. Well, I wanted to dive into the numbers and actually show you guys how the temporary buy down really works and what the numbers look like. So if you can see my screen here, this is a spreadsheet that I like to use because it's super, super easy when breaking down the numbers when calculating a rate buy down. So again, remember, a rate buy down is a discounted interest rate for the first couple years of the loan that's paid for by the seller of the home that you're purchasing. Okay. So this is not an extra cost typically for the buyer, but this is something that's negotiated into the contract that is paid for by the seller. Okay. Well, how much do you need to know how much to negotiate for from the seller to pay for your discount? Well, this is how you figure it out. So there's a couple different forms of the buy down. Okay. I want to start down here with the most popular, the 2-1 buy down. So you can see my screen right here. The 2-1 buy down, I'm factoring in a loan amount of $500,000 with an easy interest rate of 7%. Obviously, as the days, the weeks, the months, and years roll on, interest rates go up and down on a daily basis. But for this example, we're going to use 7%. And as you can see right here, with the 2-1 buy down in the first year, the rate is going to be discounted by 2%, which makes that a 5% interest rate. Okay. So the full principal and interest monthly payment is $33.26. The discounted principal and interest payment, which is really the real payment that the buyer will be paying, is $26.84. That's a monthly savings of $642, which is incredible, right? Well, that amount turns into a monthly savings into an annual savings of $77.08. So as you guys can see here, the calculations are very, very simple. What's the rate in that year? What's the new payment? What's the difference between that payment and the full monthly payment at 7%? That's 642. Take that times 12, and that's how much the annual buy down would be in the first year. Well, now we're moving on to the second year. In year 2 of the 2-1 buy down, the interest rate is discounted by 1%. So instead of 7, you'd be paying 6%. And the difference between the full monthly payment and the discounted monthly payment is $328. And that equates to a $39.45 annual buy down. So you add both of these numbers together, okay? And that becomes the total buy down cost, okay? Now, I didn't really go through the third line here, but I think it's pretty self-explanatory. From years 3 to 30 on a 30-year fixed rate loan, I forgot to mention that. This is a 30-year fixed mortgage. From years 3 to 30, 7% is going to be the rate. The full payment is $33.26. That's the actual payment that the client would be paying. And there is no buy down from those in those years. So to know how much to negotiate that seller for a 2-1 buy down, if you're going to be borrowing $500,000, is going to end up being $11,653.92. So it's a very simple calculation. There's a lot of numbers that go into it, but once you understand it, it becomes very, very straightforward. Now, the 2-1 buy down is by far the most popular buy down option there is, but there's also another option that a lot of people look into as well called a 3-2-1 buy down. So again, same concept. In the first year, 3% discount. In the second year, 2% discount. And in the third year, 1% discount. Years 4 through 30 is the full interest rate. So as you can see, the savings become even larger in this case because you're getting 3% off the actual interest rate in that first year. And so that being said, if you count up all that annual buy downs for each of those years, The total buy down cost of a 3-2-1 buy down on a $500,000 loan amount with 7% on a 30-year fixed rate loan is almost $23,000. So if you can negotiate that much into your contract from the seller to pay toward your rate, you could potentially get a 3-2-1 buy down. There's also a 1-1 buy down, which is again self-explanatory, 1% discount each of the first 2 years. And then there's also a 1-0 buy down that my company offers. My company offers every single buy down option that I'm showing you right here. But every mortgage company is going to be a little bit different. Every bank is going to be different. Some banks don't offer buy downs. Some mortgage companies don't offer buy downs. It kind of depends. We offer all of these. And as you can see, these are going to be a little bit cheaper options if you can negotiate those into the contract. So I wanted to make sure I explained how the numbers actually work when it comes to something like this, because it's crucial to obviously, have an idea of where the numbers are coming from and how they're calculated, because this tool is really one of the biggest tools that I'm seeing right now in our marketplace to help eager first-time home buyers who are kind of scared of that monthly payment get into homes that are going to end up being very, very fruitful for them down the road, right? Because they get raises in their career, they're making a little bit more money. So now the full payment, once they're 3 years into that loan, is going to be a little easier to handle. Also, it gives them a chance to save up a little extra money as a reserve, but they have to be prepared for that full payment once it comes in year 3 or 4, right? This is not a irresponsible thing where you're just, planning on making the minimum payments in the first couple of years. You have to be prepared, but if you are, this can be a wonderful tool to help a lot of first-time home buyers.